Hello everyone. This is the pre-market report video for today, 27th December 2023 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's see what happened last night in US market. Before their market opening, yesterday, based upon the transaction between November 1st to December 24th, MasterCard released the report. Compared to last year, US retail sales increased 3.1%. Which is good. However, it was lower compared to last year's 7.6% increase over 2021 period. Still, from the economy perspective, this is a positive news. In addition, we know for November month, PCE inflation dropped massively to just 2.6% and it was very close to Fed's average annual 2% target, which we discussed in detail in the last pre-market video. This in turn made the Fed monitoring tool to predict near 85% chance Fed will perform the first interest rate cut as early as March 2024. Hence, last night, both these influenced all three major index to open positive and close positive. In fact, yesterday, S&P 500 was within 1% of its all-time high value, whereas Dow Jones in the intraday, it hit another new all-time value. In the end, Dow Jones increased by 0.43%, S&P 500 increased by 0.42%, and Nasdaq up by 0.54%. In case of VIX, it's same around 13. Moving on, there was a further escalation on oil ships in Red Sea, which increased the fear of shipping disruptions. That and this increased hope of interest rate cut both increased the oil price by around 2.5%. Hence, at the time of this video, WTI crude was trading around $75.5 per barrel, whereas Brent crude closed just below $81 per barrel. Additionally, in the comment section, frequently I receive requests to include info about gold price. For that, please allow me some time. I haven't done that before. So first, I will start monitoring the gold price and then let me figure it out how to add it. Till that time, please bear with me. Then regarding Indian ADR, as it is, Infosys, ICICI Bank and Wipro closed in line with Indian market. But HDFC Bank closed negative, whereas in Indian market, it closed positive. Then if we calculate the arbitrage, Infosys and ICICI Bank is very close to flat with respect to Indian spot market, whereas Wipro is at least 1% negative. And HDFC Bank is very confusing. I mean, for the past 1 month, for sure, US dollar to INR value is almost flat. So, currency related volatility is out of equation. Still, despite that, for some reason, HDFC Bank's ADR premium increased from 6.8 to 9% in the last 1 month. So, if we consider the premium increase, then today, in line with the ADR, HDFC Bank stock price will drop. If not, it expects to increase at least positive of 2 to 3%. About GIFT Nifty, early morning it closed at 21,533. Hence, for now, equating that to the spot, indicating the gap up opening of 30 to 60 points. So, those were the things happened yesterday and last night in the global market. Now, let's look at the India specific information. First, about RBI press release. Yesterday in the aftermarket hours, they released a lot of things. Here, I like to highlight 3. First, about macro, they released the current account data for the September Q2 quarter. It comes as deficit of 1%. Here, this is deficit, so obviously it's not a good data, but also it's not bad either. More importantly, at the end of the quarter, the balance of payment is still positive $2.5 billion US, which means after all the cross-border transaction, India received $2.5 billion US from overseas. So overall, this macro is flat to positive. It won't damage the rupee value fundamentally. However, some analysts raised the concern that November month data was the one we need to worry, since that month only we got the record merchandise trade deficit. Either way, that data will release only on March end. Second, RBI proposed the new draft framework for easy facilitating foreign exchange related services to encourage more private players in the field. To some extent, this is definitely negative for existing banks who presently controls and dominates the foreign exchange in India, such as SBI, ICICI Bank, HDFC Bank and Federal Bank. Third, RBI has raised supervisory concerns against the co-branded credit cards issued by RBL Bank Limited in partnership with Bajaj Finserv. Here, for sure, this is not a positive news, especially for Bajaj Finserv. So, those were the 3 items I like to highlight about RBI press release. Moving on, yesterday during the market time, steel industry released the data that during April to November 2023, the cumulative steel production and steel consumption in India increased over 14% year-on-year basis, which in turn made all the steel stocks to increase. In addition, in the aftermarket hours, Steel Minister had the press conference, and in that he said they are working on the second phase of PLI scheme to support the steel industry and to stop the steel dump from China and to promote the use of scrap material. Again, which is huge positive for steel sector. So let's see whether metal sector runs positive for second consecutive day or not. Finally, about institution, for the 6th consecutive day, FIA was net sellers. However, the net sold for only 95 crore rupees. And also, yesterday the trade volume was only half of their usual volume, which is understandable since most of the European countries were on holiday. And in case of DAI, the net bought for roughly 170 crore rupees. As a summary, global momentum and US market looking good. In line with that, GIFT Nifty is indicating the positive gap up opening of 30 to 60 points. However, there are some Indian ADR and bank liquidity related worries. Moving on, yesterday as per stock open interest, ICICI Bank, RBL Bank, About India, HDFC Life Insurance, GMR Infra and Muthoot Finance got an increase in open interest with a negative close, indicates the short build-up. On the other hand, Tata Communications, Tata Chemicals, Atul Auto, M&M Financial, BEL, ONGC, IEX and Hero MotoCorp got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, today after 3 days, European market will be open. So after 11-12 am, we might see some increased volatility. It can be either in positive side or negative side, so better be cautious. Regarding macro, not much. Only US crude oil weekly stock details and 5-year note auction in the night are the only item I think that can influence the market. Coming to technical, Nifty opened flat and after some initial volatility, it gained strength, extended its recovery further for the third straight session. So on Wednesday, Nifty dropped 300 points and in the last 3 sessions, Nifty gained back those almost all the lost value 299 points. Hence, on the daily chart, it forms the small bullish candlestick pattern with both minor upper and lower shadow. First, on the positive side, for the second day in a row, it forms the higher high and higher low formation, and at present, it crosses and moved above all key moving averages, both indicating a further positive momentum. But on the other side, the volatility increased to a 9-month high, and also yesterday, the trade volume was crazy low. For example, in Nifty, as per investing.com, in any given day, roughly it will have the trade volume of around 20,000 crores. In that place, yesterday it was just 20 crores. So that crazy low. Hence, we should not trust the technical completely. Either way, from the positive momentum, we can expect a decisive breakout above 21,500 level, which could potentially propel the Nifty into a substantial rally. Until then, it expected to remain within the small range 21,300 and 21,500. In case of Bank Nifty, it rebounded after a correction day and rallied 233 points. Thus, on the daily chart, again with very low volume, it formed a bullish candlestick pattern with upper and lower shadow. Technically, Bank Nifty sentiment has again turned positive as it moved back above 47,500. And also the formed new small green candle is within the previous red candle, which indicates a potential positive trend ahead. Hence, the support is at 47,500 while resistance is around 48,000/48,250 on the higher side. Again, same as Nifty, sharp increase in volatility is a bit of concern which might cap the upside. Then on the monthly options front, the maximum call option open interest was at 22,000 strike followed by 21,500 and 21,600 with new call option writing at 21,600 strike and then at 21,500 and 21,900. Thus, the options data suggested that Nifty might face immediate resistance at 21,500 to 21,600 level. Whereas on the put side, the maximum open interest was at 21,300 strike followed by 21,000 and 21,400 with new put option writing at 21,300 strike and then 21,400. Hence, from options data, the immediate support is in the zone 21,300 to 21,000. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.